Hey everyone, Dan Longman here with Priority Lending. Hey, so I wanted to quickly give you an update on the April CPI report. So this is the Consumer Price Index. This is the Federal Reserve's favorite measure of inflation. So we were actually really hoping that this April report would be extremely favorable. Now it was good, just not quite as good as we were expecting, but it did show inflation year over year had gone down from 5% to 4.9. Now, even though that was just a little drop, to put it in perspective, about a year ago at this time, inflation was just over 9%. So to come down to 4.9, that is a pretty significant decline. So this was positive news. Mortgage rates yesterday reacted favorably in the sense that they've gone down a little bit. But here's the thing. We think this is the start of a continued trend because we really expect inflation year over year numbers to really start to improve a little bit more rapidly as we get into the summer months, so June and July, because in those months last year, inflation was pretty high. So when we look at the year over year numbers, when we get to replace those numbers that were high with lower numbers like this year, that year over year will really start to come down. The big thing too that really threw the CPI off in the month of April was oil had gone up, number one, gas, of course, but also used car sales. They were extraordinarily high in the month of April. We don't expect that to continue. So, but that was really skewing the numbers. The last thing I just want to add is that shelter costs, so like rent and housing, is going to start to come down. It has definitely peaked, and we're starting to see that come down a little bit. So this is all favorable when it comes to the CPI. And why this is important to you, because this is going to be favorable for interest rates. Like I said, we really are going to start to see mortgage rates come down. This is great news for future homeowners here. We still have the inventory issue, but rates are definitely going to allow sellers to want to move. Right now, you got to remember the reason we have such little inventory is there's a lot of sellers out there that are sitting on a upper twos, low 3% interest rate. So, prices have gone up. So for a seller to give up that rate and pay more, well, it's a double whammy for them. But when you start to see rates come down, that will hopefully spur more sellers to want to sell. Maybe they're not going to get their 3%, but if they can get a rate in the fives, get into a bigger home or a nicer home or move for whatever reason that they have, that'll really help the real estate market here, because we just need to see movement. We want to see more movement. Lower rates will create more inventory. All right. Hope you guys have a great day. If there's anything we could do for you, please let us know. Take care. Bye-bye.